Well, CEE markets at this stage are at a very interesting juncture. You've had a long period of relatively stable economies and activity, and at this point the risks that we see are mainly external in nature. So emanating from the shadow of Brexit, emanating from the possibility of a European banking crisis, emanating also from the fact that the euro, the ECB's policy on the eurozone is coming under some scrutiny and question. So we see the risks coming mainly from the financing side. In terms of the demand side, things look strong. The consumer, particularly consumer demand, is at a cyclical high, and we think that can continue over the next year or two due to strong domestic demand. We're underpinned to a certain extent by Germany, particularly in the northern segment of the Central European arena. But it looks like the growth picture can continue to flourish. The question is really whether these external risks actually undercut the story that we're seeing. Well, consumers are in a healthy state in the region. We've had 2, 3, 4 years of stronger growth, and that growth momentum is actually accelerating at this stage. And therefore, the consumer's in a relatively healthy state. Wage growth pressure is quite significant in places like the Czech Republic and Slovakia, and emerging more slowly in Poland and Hungary. Somewhere like Romania has quite low wage levels and therefore massive catch-up potential, but we're not seeing big pressure at this point in that market. But the consumer's in a good state across the region, and therefore, particularly directly for the retail sector and indirectly for the other real estate sectors, there is a good probability that we have some decent end demand coming, and therefore good news for particularly shopping centre tenants.